Now, our next speaker is Jem. So Jem is an entrepreneur and a venture capitalist. Right. These are good things. I'd like to welcome Jem from EarlyBird. Many thanks.
Good morning. It's very appropriate that I'm speaking right after Evan, who told you about the virtues of bootstrapping, and I'll tell you about the venture capital opportunity in Europe. I'm a relatively new VC. I have my fund is about close to 2.5 years old, and before that I was an angel investor. So when I started to invest in European startups, a lot of my friends turned to me and said, "Jem, what are you doing?" They felt that the opportunity wasn't there. European venture capital historically hasn't been delivering strong results. And they were surprised I was going into this business. So I'll share with you a little bit of the thinking around what led me to become a venture capitalist and why I think this is an interesting business to be in. First, a few words about us. I'm a partner with EarlyBird Venture Capital. We're one of the larger European venture capital firms with offices in Germany and Turkey. I'm based out of Istanbul. And until now, we have raised 5 funds. We manage about $900 million of assets under management, and the cumulative revenues of our companies is about $1 billion. So we've seen quite a few examples of successful companies grow and get to impressive, attractive exits. Most of our investments are in ICT technologies. A lot of it is internet. And as I'm sure everyone in the room is aware, we're going through a very, very interesting era where this connected economy that we're all a part of is exploding. I mean, we're now speaking of 3 billion plus people who are online. And this is mainly being driven by the mobile explosion. And this is going by about 300 million people coming online every year. So it's nowhere near stopping. And the barriers to start a technology company has been lowered dramatically. Where you could think of a couple of $1 million to start a business just a decade and a half ago, whereas today with the advent of web technologies, with platforms like Amazon Web Services, with a few $1,000s, you can get a minimal viable product up and running and start testing your ideas. So the hurdles for entrepreneurship, as everyone was mentioning, are dramatically reduced. On top of it, as I mentioned, the mobile wave is disrupting how connected we are, with very strong computers in everyone's pockets, very, very dramatically as well. So it's creating previously unavailable opportunities to entrepreneurs to really change people's lives. I'm sure stories of Uber or Airbnb have sort of fostered people's imaginations quite a bit. Yet we're hearing about companies that are rivaling rental car businesses or centuries-old hotel businesses, but this is still the beginning. If you think about it, the penetration of online solutions, the connected solutions, as a percentage of the total economic activity, we're still at the very, very early stages of how these technologies are impacting our lives. There is money to be made in this. Venture capitalists, the private capital that's funding disruptive technology companies is getting stronger and stronger. We are seeing a lot of the value that has traditionally been captured in the public markets is now shifting to the private markets. The example on the screen you're seeing is, Microsoft went public after 11 years of existence with about $500 million of market cap. And that looks quite quaint when you compare that to the market cap when Google went public at $23 billion. So all the value prior to that moment, that $23 billion of value was actually captured by the private investors who participated in the funding of these businesses. And even Facebook then dwarfs that number with a $100 billion plus IPO after on just its 8th year of existence. Finally, exit markets are opening up, which is good news for us venture capitalists, that we're seeing more and more IPOs come in, and so that's sort of coming from quite low points after the global financial crisis in 2008, 2009. And then finally, in Europe, the results are beginning to show as well. Just last year, the European VC community actually distributed $13.9 billion of cash back to their investors, so the investors that are investing in the venture capital funds. So, of course, these are great numbers, but we've seen this before, right? We've seen this in 2007, 2008. We've seen this in the year 2000. We don't think this is like 2000. First of all, today, the companies that are growing at the rates that I was sharing with you are more mature when they go to these exit points. They're larger in terms of the revenues, and the valuations that they're attaining in the public markets when they get this levels of liquidity is actually much more in line with sort of non-technology businesses, or they're comparable to companies that have not been started just 5 years ago, more mature businesses. As a result, you see many European businesses, these are, I think, the heroes of Europe, that are delivering sort of multi-billion-dollar exits. In the case of venture capitalists, they're returning the funds for the VCs that have invested in them. And yeah, as you can see on the screen, this is quite a diverse set of companies, including consumer businesses, enterprise businesses, pure technology businesses, technology-enabled businesses, and also geographically fairly diverse, you know, from the UK, from Germany, from the Nordics, from Eastern Europe, etc. So this is a list that I think all of us in this room can be quite proud of. Now, we're seeing this value creation, but we're still not seeing the level of funding reflected into these businesses. If you compare the level of venture capital that is going into technology businesses in the US versus Europe, which are sort of similar size economies, you'll see that the US numbers still look very, very conservative, very, very quaint in comparison. And that creates a bit of a buyer's market for us venture capitalists here in Europe. And that's why we think this is an attractive investment opportunity. And we're not the only ones seeing this, unfortunately. We're, you know, our US colleagues, you know, funds like Kleiner Perkins or Union Square Ventures or Sequoia Capital, who are investing globally, are seeing the same opportunity and coming in and actively investing in European businesses, including companies in as sort of far-flung places as Turkey. You know, Kleiner Perkins has invested in a Turkish company called Trendyol. So we're seeing this, you know, the buying opportunity is being noticed by the global VCs as well. In our region, my fund invests in Central and Eastern Europe and Turkey. This difference is even more pronounced. You know, the amount of venture capital that is invested compared to the GDP growth rates of these companies is still quite low. And especially the talent, which is the primary driver of value creation at these companies, we're seeing that there's a higher quality of talent available at a fraction of the cost that when you compare it to the global startup hubs. So to summarize, we think this is a great time to invest in European venture capital, and I think, you know, with the entrepreneurs in our ecosystem, we'll continue to drive very strong results and returns for both the investors and help create great companies in the region. So thank you very much for listening.
Brilliant. Many, many thanks. Excellent talk. Thank you.